U.S. crude oil prices have been fluctuating through the day after a historic plunge to below $0 for the first time. That means that sellers, including oil producers, are paying buyers to take the commodity off their hands, fearing they'll run out of storage capacity by May. The WTI contract for May fell almost $56, a 306% decline, setting eventually at a discount of minus $37.63 a barrel. That negative price is a first for oil futures, as energy traders rush to offload their holdings in the May contract, which expires tonight in the United States. The heavy selling of the American oil benchmark comes as the COVID-19 pandemic dries up demand, leaving millions of barrels rapidly filling up storage space in the United States. Hardly any buyers are willing to take delivery while airlines are suspended, and half the world's population is under some type of lockdown. Those hoping that demand will pick up later in the year have sold their holdings for delivery in May and bought similar positions for contracts for later dates. Now, for a closer look at the future, or what the future might hold for oil, we're joined by Vandana Hari, founder and CEO of Vanda Insights. Vanda, thanks for speaking to us. Firstly, some experts believe the negative prices were a technicality. Is that your reading as well?
There was a bit of technicality involved in it. So the very specific contract that you're looking at is the front month WTI futures, which is due to expire in a few hours. So as you were explaining a little while ago, normally traders will roll over their positions, will exit from this contract as it's expiring and roll over to the forward month. So there was a bit of that. That probably amplified the sell-off in this contract. But, without doubt, crude remains under immense pressure. The pressure has renewed in the past couple of days, essentially since this week began, when it emerged over the weekend that the U.S. states still can't see the way out of the lockdowns, the worst affected states. And, globally, some countries are easing lockdowns, but extremely slowly. And here in Singapore, as we heard today, the lockdown has been extended for another 4 weeks till the 1st of June. So, we're looking at demand cratering and remaining in this sort of nadir for some time to come.
All right, so Vandana, how will this then affect consumers?
So, normally the argument is that low oil prices are good, especially if to boost consumption. If the economy is not doing well, they can serve as tailwinds and in an economic recovery situation as well. But this is such an unusual situation where we're not in a position to have what we call a demand response to low oil prices, because when populations are under lockdowns, when planes are not flying, doesn't matter how low oil prices go, people are not going to go start flying or driving their cars around. So as far as the consumer is concerned, it's like, you're just like standing by and watching a circus. It's not really helping the consumers or helping the economies of import-dependent countries in this part of the world.
Demand for oil will likely not pick up anytime soon due to COVID-19. Do you agree with that? And how likely do you think that negative pricing could emerge in the months ahead?
So we had OPEC, non-OPEC regroup after a disastrous breakdown of their meeting in early March, and they decided to try and cut back production by about 10 million barrels per day. Now, just to put that in context, that's about a third of the demand destruction. So the estimated demand destruction is about 30% or 30 million barrels per day. So basically what has happened is the situation has spiraled way out of the control of OPEC, non-OPEC countries. They are intending to start curbing production from next month, but that's not really giving much relief to the market for the time being. As far as what changes the situation, the only thing I can anticipate is the lockdowns easing and demand starting to reappear gradually. But then again, yes, I think it's going to be extremely gradual because countries are going to be very, very cautious in how they ease the lockdown. So we're not seeing a V-shaped recovery as some analysts had predicted early on in this crisis. I think it's going to be a sustained bottom and a very slow climb out of that.
Okay, tough times ahead. Thanks for sharing your thoughts with us. Spandana Hari, founder and CEO of Vanda Insights.